Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, we made it to the end of the week. It's Friday today. What do we got going on? Not a lot of action. Dow's down about 100. NASDAQ's down about 100. Nothing, no major action yet, but it's still early in the day. Now, a lot of big names are saying we're going to get this Santa Claus rally, right? A lot of people are saying that we're already starting this new bull market, that the bear market's over. Now, I don't agree with either one of those statements. Now, that's just my opinion. You can have your opinion that we're going to get that Santa Claus rally, that we are in a new bull market. Now, here's the thing. I don't see this as a new bull market. Matter of fact, I do not think the bear market is over. Now, I wish the bear market were over. It's much more easy to make money in a bull market than it is in a bear market. All right, but here's the thing. So far, the reason that we've had this big run-up, about 15% run-up off of the lows, is anticipation of a Fed pivot. Now, I just don't believe that the Fed's going to pivot. Now, by their own statistics, they're admitting that inflation is still going up. It's going up at a slower pace, but it's still going up. If they want to win the fight on inflation, they can't pivot. Now, I know they're not going to win the fight against inflation, so eventually they will pivot and just wave the white flag and throw in the towel. But right now they're pretending to fight it, right? They're going to pretend that it's going up. So this Fed rally on the pivot, we've rallied up this 15%. I think we're getting close to being done with that rally. I think it's going to roll over. I think it's going to come back in. This is just my opinion. Now we'll see how that plays out over time. But a lot of big names are calling for that Santa Claus rally, everybody. Get in the market. I'm telling you, I call it a bull trap. It's going to trap a lot of the bulls in there when it turns lower. We'll see how that plays out. Let's go over to the real estate market. It's always fascinating to me. All right, I don't even know where to start right now. Well, let's start with this. All right, so BlackRock, they came out, actually Blackstone, symbol BX, they came out and said that they have this fund, right? They have this fund, $69 billion, and it's a real estate fund. They go out and they buy houses, they buy apartments, and now a lot of wealthy people are invested in this fund. This fund's not publicly traded. You have to be rich to get into the fund. But a lot of these rich people now want their money out. I don't know, maybe they're getting margin calls on their stocks. Maybe they're getting margin calls on their crypto. Maybe they just want to buy expensive Christmas gifts, but they want their money out of the fund. Well, here's the problem. They're not giving them their money back. They say, no, too many people want their money back. We've locked it up. We're illiquid. We're not refunding your money right now. So doesn't this sound a lot like FTX? Now, I'm not comparing the two. One has a real business of investing in real estate, and I don't know what FTX was doing, but it didn't look much like a real business to me. But anyways, you can't get your money back out. You got to be careful who you give your money to today, because these funds, they locking up and they're not giving you your money back, right? So we'll see how that plays out. But their stock is dropping a lot because they won't give people their money back. You can't make this up. This is Blackstone. Now, they were in the real estate market before, back in the 2008 crisis, right? When we had the subprime. They were in the market back then, way back then. They took $1 billion loss and they got out of the market. So a lot of people that think the institutional buyers that are going to be buying up all the properties, I just don't think they're going to be there. Now, you may believe they're going to be there, but I don't think so. I think they're the ones that are going to cause the market to come down, and they're the ones that are getting out. They're the ones that have to liquidate at a fire sale. Now, here's another example. Okay, we got this company here. Well, they're called the Reverse Mortgage Funding LLC. Now, they're owned by Starwood Capital, right? Okay, so this LLC is owned by Starwood Capital. Well, they just filed for bankruptcy. Now, what do? Well, they do these reverse mortgages, mainly to senior citizens. Okay, so they got 85,000 of these out there, right? Where the senior citizens have signed over part of the equity in their home, maybe the whole equity in their home, and they're guaranteed this payment from this reverse mortgage fund. Funding LLC. Well, this reverse mortgage funding LLC has declared bankrupt, so they're not paying these 85,000 senior citizens their money. So what does a senior citizen do? Well, they need the money to live on, right? Well, this company just declared bankruptcy, so what do? Well, maybe they want to go out and sell their house. Well, there's a problem now. They can't go out and sell their house because there's this lien attached onto it from the reverse mortgage that they put on the property. It's a big mess. I'm not sure how that's all going to play out, but I know there's going to be some lawsuits going on there. So you got to be careful where you get your money from. I don't recommend doing reverse mortgages to anyone. It's just a way to steal your house from your heirs. Now, I mean, look at there. Yes, you're a senior citizen, you have no money. I get that. And so you go and get this solution. The solution is a reverse mortgage. Well, it's not a solution. They're stealing your house. Yes, they don't steal it until after you die. I get that. Okay. Now, if you don't have heirs, maybe it is okay thing to do, but they're just stealing the property from your heirs. Do not do reverse mortgages. Once again, just my opinion. I am a real estate broker. But this thing's going to get messy over there with Starwood Capital. You see the housing market. Let's go over to another article. You just can't make this stuff up. All right, Redfin comes out, right? I love Redfin. You know, they stopped their iBuyer program. Redfin now, except we're not going to buy your house anymore. So, oh well. So much for Redfin now. But here's what they came out with the article. All right, so you need $107,000 in household income to buy the average price home in the United States. $107,000 worth of income. Okay, that's what you need. Now, this is up 45% just in the last year. Now, a year ago, you didn't need 107,000. You only needed 73,000. But now you need 107,000 because the mortgage rates went from 3% to 7%, right? So you need $107,000 just to buy the average house. And that's up 45% year over year. Now, if you go back to where the lockdown began, where the pandemic began, right, up until now, that payment has gone up 70%. Households have gone up 70%, but yet this number is not reported in the CPI because they don't take into account housing. They throw that aside, but it's up 70% in 2 years, 45% just in 1 year. So you need $107,000 to buy the average price home. Well, let's think about this. How many people make over $107,000 a year? Well, I looked it up. It's about 13%. 13% of people have incomes above $100,000. So only 13% of people can afford to buy houses. Now, it gets funnier than this. It really does. All right. So if you live in Los Angeles, right? If you live in Los Angeles, you need $220,000 just to buy a house. Now, once again, that's up about 45% year over year. But you need $220,000 to buy a home. Now, what's the average average income in Los Angeles? Well, it's about $65,000, but you need $220,000 of income to buy a house, but yet $65,000 is what the average person makes. So the average person cannot afford to buy the home because he's got to get his income up to $220,000. All right. So let's think about this. So either his income is going to go from $65,000 up to $220,000 so that we're no longer in a bubble, because a bubble is when the average person cannot afford to buy the average home. Beyond that, you're in a bubble. Below that, well, it's a great time to buy. Okay, but so is his income going from $65,000 to $220,000? I don't think so. So what's going to happen? Well, something else could happen. Let me think. The house prices could come down. They could come down. How far would they have to come down? Well, I say about 50%. About 50% to get them to be able to buy a home, right? Okay, well, here's the thing. $220,000 to buy the average price home in Los Angeles. Well, how many people make that in Los Angeles? Well, it's interesting. About 2%. 2% of the people in Los Angeles can afford to buy a home. Now, you wonder why housing is in what's called a deep freeze right now. I mean, there's nothing moving. No one's buying, no one's selling. The seller still wants to get the price Billy Bob got. And the buyers, they can't buy even if they want to buy. They're making $65,000, but to qualify, they need to make $220,000. So we have this big deep freeze. It's a big deep freeze in the housing market. And I don't think it's going to thaw out anytime soon. I think we got a long winter ahead. I think 2023 is just going to be a nightmare for the housing market. I think it could be a nightmare for the stock market also. But it gets even funnier than this. Okay, all right, so let's take a look at the area I live. I live in the Bay Area now. All right, the Bay Area. How much do you have to make to buy the average price home? $400,000. $400,000 in the Bay Area you got to make just to get a home, the average price home. You think we're in a bubble? I think we're in a huge bubble. It's like 1% of people make $400,000 in the Bay Area. 1% of people can afford to buy a home. It's a miracle, right? So why aren't homes selling? Well, nobody can afford them. So what's going to happen? Now, a lot of people say, Mike, you're just off the deep end talking about this 50% crash. I get it. Look, we haven't felt any pain yet. These are still the glory days. I mean, we're still up here. Billy Bob made it out. You can get out close to what Billy Bob got. But I'm telling you, you wait a year, 2 years. I don't know how long it's going to take to play out. Last time in 2008, it took 4 years to play out. I think it's going to play out a lot faster this time. Why? Because we went up a lot faster this time. We just shot up. 20% a year is not normal. 40% of houses up just in the last 2 years. That's not normal. Normal's about 1 or 2% going up. So I think we're in a very interesting time right now. I mean, it's fascinating to me, right? Nobody can afford to buy a home. So we're in this deep freeze right now. Their homes, they're just sitting there, right? They're going 30, 60, 90 days unsold, some up to 120 days unsold. Now, if you want to start looking for bargains out there, find a house that's been sitting for 120 days. Here's another secret. Find a house that's vacant, that's been sitting for 120 days, and go in and offer them 30, 40% below what they're asking, and they'll kind of, they'll probably just shake their head no, but I bet 1 out of 10 actually would take your offer. That's just my opinion. I'm Tall Mike. If you like this stuff, give me the thumbs up. Why not? It's Friday. We got the weekend ahead. But we got an exciting week next week, so punch the subscribe button. Everybody, get out there. Have a great weekend, and I'll talk to you again next week. Bye-bye now.